Hello everyone, Jesse Webb, Traders Pro. Market conditions pop back to bullish in a bull market. Probably going to see more of that right here at these levels, just some back and forth. We'll go from bullish back to mildly bullish, potentially like yesterday back to mildly bearish. As that starts to happen, we're just starting to get a little bit of weakness here. We'll look at that, a couple of different breakdowns here, continuing to see momentum in this bullish zone, pulling back, just kind of flattening just a little bit here as well. Breadth still solid right here, but not extreme. And then sentiment still in that upper range, as I mentioned before. That can sit there for a length of time. Buy-sell ratio back to less than 1. We're at 0.78. So the breadth of the overall market, at least all of the stocks in our database, are showing this overall setup, with breadth now being just slightly negative. And then sentiment still in that upper range above that 50% line, and I just haven't hit that extreme range yet, nor have we had any real aggressive sell-offs yet at this point. We are seeing some changes here. If we take a look at the market ETFs, take a look at these bonds. We've been talking about this here. We saw this little move where it attempted to start and continue this overall uptrend, but it started to fail. Now it's sitting right at the support level of 92. And remember that as bonds are continually dropping, interest rates are going higher. And that's really still one of the big battles right now, is where interest rates ultimately going to go. And the bond market can anticipate what they believe is going to happen as well. And as those bond prices are dropping, interest rates are still moving back up, potentially to an uncomfortable level for the economy. That's always on the table and potentially could be over this next earnings season. I believe there are some Fed numbers coming out today and this week, which should also give some indication there as well. But interesting price pattern here. In addition to bonds dropping, which means interest rates are rising, we're also seeing in the sectors over in the commodities area, we're seeing USO, which is oil. We've been covering this now each morning, for the last year, but essentially it's been a main topic during this last uptrend, as it's been starting to reverse and start to curl back up again. So now we're starting to see some follow through, some breakout, that 75 level. Haven't yet pulled this Fibonacci tool over to a new uptrend yet, at least based on this time frame. So it's still working. If we were to look at this longer term picture, going out a little bit longer, not real long, but the 1 year time frame is connecting to that uptrend. And so now we're potentially breaking back up into that momentum zone of the last year time frame and working on an overall new uptrend. So we'll see if we'll see what that looks like for oil, where we have interest rates moving higher, oil moving higher. Those are not positive things for the economy. Let's take a look here at gold. We did see gold. Well, let's look at USO as well, or not USO, but SPY, and seeing what SPY did the last day or two. This is the 1 year time frame. We know where we were at last October, November, still continuing that overall climb. And even on the 1 year time frame, you could see where we could potentially pull back to on any retracement. There's been a couple of pullbacks here in this last range now, but we'll see if we get this rounding process. If we get another retracement, potentially move back, we could go all the way back to that 488 level, and again still have it be in a support area and an overall uptrend. But there's some ranges now that we can be aware of on SPY, and we're going to want to be watching those. So in the 6 month time frame here, you've got this not a really bullish looking pattern yesterday, but just lots of chop, not selling, not buying, just kind of a flat market right here. We'll see if we get any kind of catalyst that ultimately drive the markets higher or lower here today or not. Let's take a look at some muscle stocks in the group. We've got Carvana, which has been a high flyer. It's had a nice move for the last month or so, still holding that support area, still holding that upper momentum zone at that 236, and see if we get any follow through on Carvana. Also seeing some other, Abercrombie Fitch, continuing to see some retailers that are in there. Retailers have done quite well over this last year, and Abercrombie and Fitch, ANF, is one of those. And CLS, electronic manufacturing, also holding some support right here. Starting to see some of those trends starting to weaken. I believe we're seeing some of those larger patterns, SMCI, and some of these AI stocks and crypto stocks starting to have a little bit of a pullback here as well. So keep an eye on some of those names. Also remembering, as we're looking at towards the upper end of this trend, being aware of your risk tolerance, being aware of your exposure to the market. What percentage do you have in equities? What percentage do you have in multiple equities versus cash versus anything else? In terms of market, being the upper end of that market range is a good time to reevaluate your percentage holding to equities, if that allows you to adjust your risk profile just slightly at these levels. That'll do it for today's update. Everyone have a fantastic day today.